Good evening, all. Just putting up another weekly forecast session for the week ahead from Monday, the 23rd of May until the end of the week. I have been a bit silent on Instagram as I have decided to turn my phone off over the past 2 weeks, 10 days approximately. Should basically be coming back out of social media detox Tuesday, Wednesday of next week. We'll see how it goes. But I just wanted to do that as a bit of discipline for myself to show me that I don't need to kind of stick to social media all the time. That's why you haven't seen me as active on the chart. However, trades have been taken, trades have been placed, and I'll run through those at the end of this video. In regards to the forecast, we can see that the bearish trend has continued. We're currently sitting in an area of consolidation, which is actually a bounce from the higher time frame demand. So the market's come down bearish. We've been watching this happen. It's actually come down to this area where we had a change in direction, a Koch Baker structure that was confirmed at this point, where the market came, took lows, COVID lows were created, came back up, left behind equal highs, and then those equal highs as a structural point were liquidated with this move here, and the market continued bullish. So where the Koch was actually determined, that area of consolidation that formed that change in direction is actually where, where the market has now reacted out of. So we can see if we kind of pull this level across, that's where the market's reacted out of. The demand at the bottom is the extreme demand where it's kind of come out of and created the bounce that we've seen this week. However, when it has actually bounced, we've actually come up against supply, and we can see the supply sitting here. There's liquidity above this on the lower time frame, and a fair value gap that has been left behind. It's been filled slightly, but not mitigated entirely, nor mitigated to 50%. So there's still exposure of liquidity here. The market's it's bounced from this level. It's continued bullish, taken liquidity that was left behind here, hit the supply and slowed down. So as it's hit that supply, it started to consolidate. Now, we don't know exactly which direction it's going to go within. It needs to show us a bias as it gets created. And once we see that bias formed, we'll then be able to determine exactly which way we trade. So on the daily, that's what we're seeing. We've got levels already marked up from previous weeks that kind of show us liquidity and lows and highs above us as well. So as we go down to lower time frame, this is what we're looking at. We'll turn off some of these indicators to kind of give you guys a better view. Yeah, okay, FEG, let's get rid of that as well. Okay, right, so we can see that throughout the week, obviously we've had that reversal bullish that we spoke about, where the market is going to come back, test areas of inefficiency, and then push itself bullish. Beautiful trade was caught on this Thursday from the very early morning open. We came into Frankfurt, London liquidated, and then the market moved up bullish to levels that we were kind of looking at in terms of filling this fair value gap. So great bullish moves were obviously gained throughout the week, and there should have been a lot of benefit that you guys have had from the previous forecast where we were actually projecting that move to go up to then sell down. So we're at the top now where we kind of want to see how it kind of reacts to areas of inefficiency up here. We've got liquidity on the higher time frame sitting above us. We want to see how that gets liquidated. We want to see whether it respects this inefficient wick that has not as yet been mitigated 50%. So if we take that and pull the fib, we can see that it's basically touched slightly and pulled away and then respected this wick down here. So we're looking to see how it kind of affects that and then pushes up into the remaining inefficiency on that. And then we've got levels above here, which obviously have fair value gaps above as well. And then there's daily fair value gaps and liquidity lying up here. So we want to kind of see exactly what happens in the short term in terms of liquidity that's been rejected from here. So again, we've got a whole tranche of liquidity sitting in this direction here. And we want to see how the market kind of reacts to this. And then kind of either confirms for sells by taking levels that are sitting down here where the market was held up by demand. If it breaks through these levels, then we'll kind of know that we're kind of going for sells slightly. It'll push down further, try and target liquidity down here. And then we want to see how it reacts out of this to either continue to buy up or to continue to sell. So short term, we're kind of only looking at the consolidation that we're seeing at the moment on Friday to see how it reacts to liquidity sitting on both sides to then confirm a bias to go either one way or the other. That's what we would look for. It may be a bit of a waiting game. We have got a bit of news coming up throughout the week, I believe. So we'll kind of have to obviously wait that out, see how things play out. We've got red news folders coming for the UK S&P, that's not really too important. New home sales, again, red news folders are coming out, but nothing great, to be honest with you. GDP growth rate may be kind of quite important for the US. And then towards the tail end of the week, we've obviously got the personal income and spending. So retail news releases, red folders, are going to be obviously viewed throughout the week, and they may be a cause for the market to liquidate one way or the other to then move in the directional bias that it intends to go. We'll have to wait and see exactly what happens. As I said before, we react. We don't assume and predict or FOMO into an entry. We want to see how the market reacts, confirms its bias to us, and then we enter on the trade as it kind of develops. So I hope that's been helpful. I will post this up now, and we'll go through, actually, as I did say, the trades of the week. So we started on, let me pull up my calendar, sorry. Okay, so previous week was the 16th to the 20th. We've got here from the 16th, 17th, 19th, and 19th. Okay, so the trades that we kind of saw play out, if we run through those, yeah, 15-minute time frame, that's what we can see. Okay, so beginning of the week was here. We came in, trades were entered. Unfortunately, this trade should have been held. However, we took them off at decent positions. So we kind of got a 1 to 10 on the 16th, which is with our weekly bias. This trade really should have actually been held, but I was actually concerned about the equal lows that were left behind below. And for that reason, it wasn't held long term. We thought that this was actually going to come back and get liquidated in New York. Never really happened. We kind of saw the New York trade play out here. We got back on the sells. We didn't enter the buy as we expected it to continue to then liquidate after taking positions up here. The market continued bullish. As you can see, we obviously were marking up fibs to see where to kind of short back down to then move back up. It never shorted. So it kind of continued to move from Monday onwards. And the bias that we had for the week in terms of buys was confirmed. We picked up a 1 to 10 there. We picked up a 1 to 22 here. So effectively cleared that on Monday. And then as we proceeded into the week, we came into areas of interest, key levels above us here, which we kind of ran into, I believe, fair value gap. And then we kind of sold down as the market kind of developed itself. London actually sold, didn't get in on the trades early enough. New York came in, pre-New York liquidated, and then we kind of got in with the bias as it developed. Again, a 1 to 10 there. Then we kind of came back, and this was the trade that we were looking for all week, which should have effectively have been held from here on Monday. But when we saw that the market was coming back to test levels and it was actually respecting demand that had been created here to push the market further up, we kind of got in on the buys here on the Thursday. And that was held for the long position that we were looking to liquidate these highs up here. And that was a 1 to 55 trade. And then we got a trade on the way down as well, which was this trade here, a 1 to 10. So that trade, I believe I have got proof and justification of that. But all in all, throughout the week, we cleared 22R, 10R, 55R, 7R. So approximately 80, 87, 87, 92, 92R for the week. And in terms of trades that were taken, do we have a video up here? I believe we do. We don't, but I've got this trade, which shows you exactly what we did. So here's the trade that was taken on Friday. The sell down, it's actually in one of my Discord chats. And we can see obviously the positions here and then the profits that were taken on that trade. So again, unfortunately, I wasn't on Instagram for the week, but I will be back middle of next week. And hopefully that has shown to you that the system does work. The forecasts are accurate, but we only trade when the market confirms a specific move and bias and utilize it with the setup that we have. So again, wait for the koch, wait for the boss, go back to entry, look for liquidity, don't get stopped out, and take the trade once the market decides that it's going to reject from an area and move in a certain direction. I've gone through this enough on the channel where you should be able to understand it. But in essence, it's effectively just an equal high, equal low, a liquidity grab, and confirmation of the move with either a Koch or Baker structure and then a retest. And if you don't understand that enough, then I'm sure there'll be enough content on the Instagram for you to go through. If not, shoot me a DM. I'll pick it up in the middle of the week and I'll get back on social media by then. Take care. Thank you. Good luck.